This week on Wealth Track, an exclusive interview with contrarian investor Robert Kleinschmidt on why the Trump rally has legs and the bargains to be found in battered retail and energy stocks. Next on Consuelo Mack Wealth Track. I began the interview by asking Kleinschmidt what, if anything, has changed in the economy and markets in the age of Trump.
Animal spirits. So, and that's very important, right?
Yes.
Because when you have a bad situation, which we'll talk about later, which is from an economic point of view, which we did have during the Obama years, and you expect things to stay bad or get worse, your animal spirits are pretty deflated. Which
means that you don't invest, you
don't take risks.
Take risks.
You don't
okay.
take risks.
Right.
You don't. I mean, you don't. The demand for loans. People talked about loans not being available during that time period, but the truth was that the demand for loans was very, very low. People don't want to go out on a limb when their animal spirits are low. Mm-hmm. So what happened? So Trump was elected, and as importantly, I think the Republicans held both houses of Congress. So it became possible to think about big changes in economic policies and regulatory policies and tax policies, et cetera. And so that changed the outlook of businessmen and consumers and others. And so the animal spirits got more robust. And so that alone generated a lot of momentum. And it generated a lot of momentum in the markets, and it generated a lot of momentum in the economy. Mm-hmm. Now, it won't forever.
Well, wait a minute. So in the markets, I'll give you that.
Right.
But have you actually seen it generating activity in the economy, in that the capital spending has really not picked up, much to the chagrin of economists who say, we've seen business confidence go up, but there's nothing to back it up.
Well, so business confidence has gone up. Consumer confidence has gone up, and it takes a while for these things to unfold from the drawing board to actually money being spent. So it's early days.
It is early days. Mm-hmm.
And there's a real question as to whether or not Trump can implement his agenda, at least his legislative agenda. Mm-hmm. So it's not clear that animal spirits can push the markets and the economy forever. You have to have some follow through, and that's an issue. But for the interim period, you've had the animal spirits, and you've also had, very significant rollback of regulations. And that's where Trump has his greatest leverage, because that's the area where it was the most suffocating to the economy during the Obama years.
And market valuations, what is your sense
So
of
there,
the
I think what's important there is that valuations are not egregious, but they're certainly not low, and they're above average. So it's asking a lot for valuations to go higher. And it's particularly asking a lot for valuations to go higher if interest rates are going to start to move up. So you're not going to get the market moving up on the basis of higher valuations. You can only get the market moving up, in my view, with higher earnings. Mm-hmm. And higher earnings can drive the market a lot higher for a longer period of time. But there, you don't get higher earnings unless you get stronger economic growth. And so it gets back to the need to roll back the regulations, roll back the economy-crushing tax burden, and let the economy go, but not so fast as to raise interest rates to the point where it makes governments insolvent in our country and really all over the world.
And to talk about where you're doing most of your looking, because I think you had a great quote that you told me, something about, if a value investor has to look where values are, not where you would like them to be.
Right.
So where are the values where I would rather not be?
Yeah, right. Where you'd like to be is you'd like to find the next Netflix and Amazon.
Exactly.
But I think the two areas that have performed the worst this year and for quite a while is the energy area and the retail area.
Recently, retail shock that Amazon bought Whole Foods.
Right.
That was the talk of Wall Street.
Right. It was exactly.
And so tell me about the retail space.
The general point of view was that it's bricks versus clicks, right? And the general point of view is that clicks was winning and bricks was losing, and that's true. That has been true in terms of at the margin, but still the overwhelming amount of retail shopping is done in stores. And the fact that Amazon went out and bought stores is a reasonably good imprimatur that they think that stores are still important. All the retail stocks big retail stocks were down on the day that was announced. But on the same day that it was announced, and when Walmart was off 5%, they announced that they acquired yet another online retailer. So, Amazon's buying bricks and mortar, and Walmart is going the other way. And but if bricks and mortar are important, I guess you could argue that Walmart has thousands of stores, and Whole Foods has hundreds. So who's really better positioned? My point is that it's so obvious to everybody that it's all about e-trade, that there has to be values, and there are values, I think, in the more traditional retail space.